Hello and welcome everyone. My name is Cooley. I'm from the Targeted Outreach Director from the California Department of Financial Protection and Innovation. Thank you so much today for joining our webinar. This is our Empowering LA Survivors Resource Webinar. This is part one of our resource webinar. Please be sure to register for our second part webinar. It's happening on Thursday at noon. For that webinar, we'll be talking about fraud prevention and local resources. So we will be putting a link into the chat, so you could join that, register for that webinar and join that on Thursday. I know we're right at noon, so I'm going to give everyone another 2 minutes to jump in. I'm looking at individuals already logging in. Thank you for joining. Let's give everyone another 2 minutes to jump in, and then we'll get started. Okay? Thank you so much. Okay, hello and welcome everyone. My name is Cooley. I'm the Target Outreach Director for the California Department of Financial Protection Innovation, also known as DFPI. We have a star-studded cast here going to be sharing a lot of great information about managing your debt and relief options. So let's go ahead and get started. With that, I want to please welcome Elizabeth Gonzalez. She is Senior Supervising Attorney with Public Counsel. Elizabeth, please take it away.
Thank you so much. Hi, everyone. I work with the Consumer Rights and Economic Justice Project, so hopefully some of this information will be very useful to you. Next slide, please. So the first thing that I always say to folks in these last few months is make sure that you're taking care of yourself first. If you don't want to talk to a debt collector, you don't have to, okay? If you cannot afford to pay, or you can't even think about figuring out a budget to pay these credit cards or personal loans, you don't have to, okay? There are laws that protect you, your income, your bank account. So if you need to focus on yourself and other things first, that's okay. Next slide. I do want to remind folks that since the fires happened so close after the holidays, it's possible that some of the things that you purchased on those credit cards are protected by purchase insurance. So you, in order to sort of relieve yourself of some of that debt that came from those purchases, one of the things that you can do is reach out to your credit card company and see if they offer purchase insurance. You don't have to explain why. If they offer it, they'll let you know. You can also look at your app or your terms and conditions, see if it's there. I do want to say, just be careful that you don't admit to owing anything, because especially after a disaster like this, mistakes and fraudulent transactions are often made. Next slide. Once you have that time and energy, or you have, an hour of time, please review your account statements and any pending charges that you have. If you have the app, pull up the app, take a look at it. If you receive paper bills, and you haven't received them because you're displaced, reach out to the credit card company and have them send them to you again. The reason this is important is you want to make sure that you're disputing any charges that you don't recognize. Federal laws do have some time limits on what needs to happen quickly if you dispute a charge within a certain amount of time. So that's why you want to do that, because if there is something that you don't recognize or that you didn't authorize, you want to make sure to get relief from that debt as soon as possible. And then just make sure to keep an eye on those statements. You can also review your credit reports, get them from annualcreditreport.com, and make sure that you're disputing any accounts that you do not recognize, because unfortunately, after disasters like this, personal information does get lost and used without your authorization. Next slide, please. If you have some credit card or loan balances, there's kind of different things that you can do. If you are current on your debts before the fires, but right now you can't pay them, call your creditors. You can reach out to your lenders, your creditors, your banks, and ask for some time, a forbearance of at least 3 months, see if they'll waive any interest or penalties, and just say, look, I'm recovering from this disaster. Please do something good. If you were behind on the debts before the fires, and you still cannot pay, don't pay. And even before you think about making a payment, if you're able, make an appointment with a free legal clinic that assists debt collection. Next slide. This is important because if you were behind on your debts for a really long time before the fires, you may never have to pay them. There might be nothing that these creditors can do to come after you. There are time limits. And if you make a payment, that starts the time limit, that law all over again. So you want, if you're close to that, not having to pay, then don't pay. And again, free legal clinic, public counsel offers them, neighborhood legal services offer them. At the end of the slide deck, there's a link, there's a series of links that you can reach out to get some assistance, to make sure that you are aware of your rights. Next slide. If you are being contacted about debt collection, you want to make sure that you're aware that there are laws that limit what a debt collector can say or do to you, okay? You have the right to ask a debt collector to stop contacting you. Under state and federal laws, if you provide them with written or verbal communication that you don't want to hear from them, and they continue to contact you, you might actually have a claim against them. And you also have the right to ask a debt collector for information about the debt they're trying to collect. Next slide. If a debt collector contacts you, and if you choose to answer the phone, because remember, you don't have to, you have the right to find out more about the debt. If they send you a letter, you can also request more information in writing. You want to make sure that whoever's collecting on this has the right to do it, that they're not just making something up and trying to get money from you, because unfortunately, this is happening. You have the right to know the name of the creditor, the original creditor and the current creditor, the amount that they say that you owe, and how you can dispute the debt. Next slide. You never want to give out your personal financial information to a debt collector. So if someone calls you and says, I'm calling to collect on a debt, can you please confirm your social security number? No. If they go, can you please confirm your address? No. Okay. You do not have to provide any information to someone who is contacting you to try to collect a debt. You can provide the information once you know it's a legitimate collector, but you don't even have to do it then. If the person or the company who is calling you, reaching out to you, trying to get money from you to pay a debt, and they can't tell you the name of the creditor, the amount, how to dispute, or they get angry at you for asking those questions, hang up. It's probably going to be a scam, or they're using abusive tactics and you don't have to deal with them anyway. Next slide. Other things to look at, if you're getting phone calls from a debt collector and they're demanding you to pay right now, otherwise we're going to take you to jail. If you don't pay right now, we've got somebody down the street who's going to knock on your door and give you a lawsuit, and they use abusive, harassing language, call you a deadbeat, anything like that, they're not doing it by the law. So either they are not actually trying to collect on a debt, they're trying to scam you, or they're violating state and federal debt collection laws. Either way, you don't have to talk to them, okay? Remember, you cannot be taken to jail. This is a fear that people have. You cannot be taken to jail for not paying a consumer debt like a credit card. Next slide. Um, your wages, I also want to make sure you're all aware. Sometimes debt collectors will threaten you and say, if you don't pay, we're going to garnish your wages. We're going to go after your bank account. That cannot happen until there is a lawsuit and a judgment against you. So if you've only been behind a month or two and someone is saying they're going to take money from your paycheck, they're lying, because they have to have a judgment in order to do that. And even if there's a judgment, there are really strong protections in the state of California for your income and your bank account. We're going to talk about them. So even though they're saying, we're going to sue you and get a judgment and garnish your wages, they might not have the right to. Next slide. If you have been sued, so unfortunately, there were folks who got lawsuits before the fires. If you receive that lawsuit and you haven't responded, call the phone number for the attorneys on the complaint and ask for an additional 30 days to respond. If you or someone in your home was not handed a lawsuit, you may not have to do anything. So if you're getting like letters saying, hey, it looks like a lawsuit was filed against you, we can help you. That's just someone trying to make money by having you hire them as an attorney. If you have questions about whether you've been served, whether you've been sued, please make an appointment with a legal services organization who can help you figure that out for free. Next slide. If there is a judgment against you, so let's say you were sued a while ago and now there's a judgment and you're trying to figure out what to do while trying to recover from this disaster, there are laws that can protect you, okay? So at minimum, your disposable wages of at least $792 per week cannot be touched. So if you're bringing home less than that money per week, you cannot be garnished. That's an automatic protection. So you don't have to worry about a wage garnishment. This amount is tied to the minimum wage where you work. So the $792 is just based on California's $16.50 minimum wage. So if you work somewhere where the minimum wage is higher, this amount that's protected is higher. And I just want to point out that disposable or take-home pay in this context means your gross pay minus those required deductions like state and federal taxes, Social Security. Whatever's left over after that, if it's less than $792 a week, you're not going to be garnished. And if you get paid at different, every twice a week, twice a month, once a month, that number changes. Okay. Next slide. You also have protections for your bank account. So again, even if there's a judgment against you, if the only money in your bank account is a Social Security check deposit, that's going to be protected from levy. A creditor cannot take Social Security or other government benefits to collect on a debt through a bank levy. The bank will automatically protect 2 months. So if you receive a $2,000 a month Social Security payment, and that's the only thing that goes into your bank account, up to $4,000 will be automatically protected. If you have different sources of income, like some Social Security, some gifts from, daughter or mom, there's a different protection. Your bank account is going to be protected of at least $2,170, no matter what that money is made up of. Okay, this amount changes every July 1st. It's been going up every year since I've been doing this, so that's probably going to go up. And so these are automatic protections. You don't have to do anything. So even if there's a judgment, the creditor comes and tries to levy a bank account, the bank is going to say, nope, there's nothing that you can take. If there's more in your bank account or you earn more wages that can be automatically protected, there are ways to protect more than that automatic protection. Next slide. And just as a reminder, please make sure that if you have questions about that, reach out to a legal services organization, because if you end up trying to do something that you don't need to do, you might end up having to pay something you didn't have to pay at all. Okay. This is a time when people are really sort of overwhelmed by the debt because of the disaster, because of everything else that's going on in their lives. And so people always ask me about debt consolidation. What I respond to them is it's a personal decision. But if you don't have the money to pay your debts, you shouldn't be paying them. You need to focus on yourself. You need to pay for your food. You need to pay for your gas. You need to pay for where you're living. If you decide to move forward with debt consolidation, just know that every company is going to tell you to stop paying everything. they're probably not going to tell you that there's no guarantee that you'll actually get any relief from them, but that is true. Okay. Even though there's no guarantee, they will ask you to put deposits into a completely separate bank account that they say is yours, but it's really hard to get to. And sometimes they ask you to put in monthly payments of $500, $600, $700, and they don't even know what they can do for you. And you can still be sued on those debts that these companies are trying to settle because there's no guarantee they're going to be able to settle it. Even if they do settle it, please know that the amount that's forgiven, meaning the amount that you don't pay, that's considered taxable income to you. So if you had a $10,000 debt and they settled it out for $2,000, that remaining $8,000, the IRS thinks that you earned that money and they're going to tax you on it. So if you have a means tested benefit like Medi-Cal or Social Security disability, if you get the earned income tax credit, you might put those in jeopardy if your taxable income pushes you over into not qualifying for those benefits anymore. Next slide. If you do decide to move forward with the debt consolidation, just please do not sign anything you do not understand. We know that these companies rush you into signing something. While they're on the phone with you, they'll send you an email and say, go ahead and sign, go ahead and click, go ahead and click. And they don't give you the opportunity to like pause and read everything. And these are 50 to 150 page contracts. So if you're being pressured to sign something like that so quickly, think about whether it's the best thing for you. If you have any questions the company's not going to answer, be careful, because they might not want to answer those questions, because if they answer them truthfully, maybe it's not the best thing for you. And if you don't know where your money is going to be going or how the company is going to settle the debts for you, again, be careful, because if they're not willing to tell you that information or it's hidden somewhere, think about why that might be. Okay, next slide. Other folks we're seeing is asking about bankruptcy. And what I say is right now, and I'll say this in the last slide, bankruptcy is always going to be there. Okay. Bankruptcy will be there in 6 months, a year, 5 years. Right now, think about whether there's other things you need to focus on. If you already have protections, if your wages cannot be garnished, if your bank account cannot be garnished, you already have protections even without going into bankruptcy. If you decide that you want to do a bankruptcy, think about some of those risks, okay? As soon as you file a bankruptcy, all of your credit cards get shut down. You don't get to pick like your favorite one. The bankruptcy goes onto your credit report for 10 years. So you're adding something bad onto your credit report that's going to stay there for 10 years. The bankruptcy alone is going to make it difficult to obtain affordable credit. I don't say credit general. It's just going to be more expensive. So someone will be happy to lend you money after a bankruptcy. They're just going to charge you a significantly higher interest rate. Bankruptcies, in some cases, even though it's not supposed to be like this, landlords will look at a bankruptcy and take that as a negative thing. And we have heard stories of landlords sort of denying people rentals because of a bankruptcy. So you want to be careful about that. Next slide. The other thing, especially now for those of you who are homeowners and are trying to rebuild and you're getting some GoFundMe, you're getting some insurance, you want to be careful, because if you file a bankruptcy, you might lose some of those things, okay? Insurance proceeds, if you get them and within 6 months get another house, those are going to be fine. But right now, I don't think it's going to be very easy to actually be able to take all of those proceeds and build a house in 6 months, unfortunately. So you want to be careful about that. GoFundMe proceeds, probably you're not going to be able to protect all of that. If you do have land that you own, or you do have that GoFundMe, it's possible that you might lose something else to protect the other. So you might lose a car to protect the GoFundMe. So you really want to make sure that you are aware of all of the assets that you have and talk to an attorney before you file, because otherwise you might lose some of this money. If you owe money to friends and family members, you're going to have to include them in the bankruptcy, and they're going to have to get notice. You have to include everything. So you don't get to decide, oh, I don't want to list this person or this credit card. Everything has to be included. So if there's questions about that, or you don't want to include somebody, bankruptcy probably doesn't make sense. Next slide. The other thing that is really, really important, if you have given or transferred anything of value in up to the last 10 years, the person you transferred it to may have legal problems, as will you in a bankruptcy. This is even true if it was transferred as a result of a divorce or a settlement agreement for a marriage. If the house went to your ex, that could be then sold in a bankruptcy that you file, which is not a great thing. So just don't rush into bankruptcy. Talk to a bankruptcy attorney. Public Counsel has bankruptcy clinics twice a week. It's free. There's going to be links at the end of this slide deck. Just remember, bankruptcy is always an option in the future. This is not something you need to do right now. It is a huge financial decision. You have so many other things to worry about. Bankruptcy shouldn't be one of them right now. Next slide. So there are alternatives. So if you're having issues making payments on your mortgage, and I think someone's going to be talking about that either in this one or the next one, reach out to the servicer. Ask for forbearance. Find out your options. If you're having trouble making payments on your car, reach out to the finance company. Reach out to a HUD-approved housing counselor for other options if your mortgage servicer is not responding to you. If creditors are harassing you and it's just overwhelming, send a no contact letter. There's a link for one in English and Spanish at the end of this slide deck. Apply for benefits. It's possible that maybe you didn't qualify for benefits before the fires, but now you do, including unemployment. If you became underemployed or unemployed because of that disaster, you might qualify for unemployment, for CalFresh, for Medi-Cal. Next slide. If you need immediate assistance, please call 211. They will be able to provide you immediate referrals for food, utility assistance, things like that. If you received a lawsuit, please contact a nonprofit legal services organization for assistance. Our website also has some really good resources on responding if you don't feel like contacting us individually, but please go to our website, contact somebody for help. Next slide. And then I've listed here some additional resources. You're going to be getting this as part of the PDF packet. So there's some videos, there's resources, there's no contact letters. Please take advantage of them. And you can always go to our website, publiccounsel.org, to look at all the services we provide and to make an appointment at one of our various clinics or apply for services. Thank you so much. And I'm going to turn it back to you, Q.
Thank you so much, Elizabeth. That was Elizabeth Gonzalez. She is the Senior Supervising Attorney with Public Counsel. A lot of fantastic information. I also want to plug, I know you had some fantastic slides about debt collectors. I want to plug us, the DFPI. We actually license and regulate debt collectors. So if you are experiencing an issue with a debt collector, you can always contact us, and I'll have more information about who we are and what we do, and then later kind of slides. But for now, I would like to introduce Jeff Prang. He is the Los Angeles County Assessor. He's got some fantastic information right now. Jeff, please take it away.
Hello, good afternoon. Thank you very much for the invitation to be with you today. I want to first thank the California Department of Financial Protection and Innovation, as well as the LA Department of Consumer and Business Affairs for organizing this webinar to share information and resources for homeowners impacted by the wildfires. You know, as we begin to recover from the devastation to homes and businesses and, frankly, entire communities, I want to assure everybody that the assessor's office is here to support affected property owners by offering on-the-ground assistance during these difficult times. There's a couple of programs that are most important as it relates to your property assessment and taxes. The first one I want to talk about is something called Misfortune Calamity. This is a program that we urge everybody who's been impacted to file. This allows me to reduce your property assessment and therefore your property taxes to reflect the damage or destruction to your property, which will lower your property taxes until you rebuild. To qualify for a misfortune calamity, the damage needs to exceed $10,000, and that can include smoke damage. And the claims need to be filed within 12 months of the incident date, although I'm currently sponsoring legislation that will extend that application period to 24 months. The To give you an example of how this would work, if you're, let's say your home is worth $1 million and 50% is valued on the land and 50% on the building. If the building was completely destroyed, we will zero that out, and your new assessed value will be $500,000, reflecting the land. That's an oversimplification, but that's essentially how it works. You won't be your assessment will begin to be restored once you've to the pre-fire tax level. Once you've completed reconstruction of your home. You will not be reassessed at market rate, but at the rate that you were prior to the destruction. Some other things that are important about this. Once you've filed your misfortune calamity, we will transfer that information to the treasurer tax collector. They're the ones who are responsible for collecting taxes, and they will automatically defer your property tax payment. If you've already paid both of your 2024 property tax payments, any reduction that results from our reassessment will result in a refund. If you plan to pay your second installment of your property taxes before April, the treasurer tax collector recommends that you do not pay, but wait until you receive a new tax bill reflecting the adjustment from the misfortune and calamity claim. These tax deferrals only apply to those people who pay their own taxes directly to the tax collector, and not those who pay through an impound account with your mortgage company. In those cases, you'd have to contact your mortgage company to see what programs they have available. Although if they did pay the full amount on your behalf, you will get a refund. The other property tax program that we manage is something called a decline in value. And this is for homes who weren't physically damaged, at least not to the degree of others, but whose market value has dropped significantly due to the disaster. This program allows me to lower your tax base to reflect any economic value reduction. This is also going to be applied to land value where appropriate. One of the challenges I have with applying this law at the moment is that the decline in value reflects the value on January 1st of each year. That's called the lien date. And obviously the fires took place several days after that. So I've asked the legislature to adopt legislation that would allow me to include fire impacted properties on the January 1st, 2025 lien date. There's also a great deal of confusion out there about what people are able to rebuild and what the different government agencies standards mean. You may have heard that the city and the county are allowing an expedited permit processing if you build up to 110% of your property. You may have also heard that the assessor's office has a program that addresses 120% of value. And I want to try to make the distinction between those numbers today. First, again, the 110% refers to an expedited rebuild permit process ordered by the state or the city or the county. And this is a different standard than for the assessor's office for rebuilding and reassessment. If you under reassessment standards, if you build something beyond what was there before the fire, something we refer to as substantially equivalent, then anything that's built above that standard will be assessable. So if you build 10% larger than your pre-fire property, that 10% addition could be subject to reassessment. The one that's confusing to people is the 120% standard for the assessor's office. This essentially says if you rebuild your property, you can build up to 120% of the pre-damaged property's value, as long as it's substantially equivalent of size and use. This may give you a little bit of opportunity to add some size, not 120%, because the standard is not of size, but of value of the property. We don't think this is going to apply to very many property owners because the time it will take to rebuild is probably going to take several years, and due to inflation and cost, that 120% value will probably not be very useful to anyone. Plus, that 120% value provision requires you to rebuild within 5 years. The second standard, the most important standard that we'll be applying for is, we just call this our regular misfortune and calamity program. This means if you rebuild to a substantial of equivalence, what was previously there, your pre-fire tax base will be restored. If you add additions such as an ADU or add additional square footage, that additional square footage will be assessed and added to your underlying assessed value. Kind of moving on to another topic, one of the important issues that seems to be more and more important as we dig into this is ensuring the property owners update their ownership records. One thing is particularly much more prominent in Altadena area that's not as much in Pasadena is a lot of people live in their family home. It may have been the parents' home and the grandparents' home that they inherited, but they never changed the name on the deed. And this is a significant problem. If your name is not on the deed, you are not the legal owner of the property, and you will not qualify for some of these tax savings programs. If it was indeed an inherited relationship, you do have an opportunity to fix that without penalties or interest, but you need to do it very, very quickly. Once we've updated our ownership records, you only have 6 months to update the deed to ensure that the transfer based on inheritance is legally recorded. Another couple last things I wanted to emphasize before I conclude. If you own property, I urge you to go to our website and register for what we call the homeowner alert. This is particularly important right now with all of the scams that are being perpetrated against fire victims. People may attempt to engage in title fraud and essentially steal your property. If by signing up for the homeowner alert, anytime somebody attempts to mess around with your ownership of your property, you will receive an email within 48 hours, letting you know that somebody's attempting to record something on your property, such as a grant deed or a deed of trust. If you're not registered for this program, then the first notification that you'll receive that something is being recorded on your property is a letter in the mail from the registrar recorder, and that usually comes 30 to 45 days later. So it won't. If they're attempting to commit fraud against you, that may be too late. The other thing that you can do is sign up for our assessor's e-service account. This will allow you to set up a profile with your property. It will allow you to take care of a lot of the things with our office online, rather than having to come to the office or send things through the mail. You'll be able to update your mailing address to make sure that all the documents coming from our office know where to find you if you've been displaced. We're happy to answer questions. We're still staffing the disaster centers. We're still participating in lots of webinars in person and online. And we're available. You can schedule appointments with us to do an online appointment from our website, but we're really happy to provide you as much support as you require and make ourselves as accessible as possible. So thank you very much for the opportunity to share this information, and happy to answer questions.
Thank you, Assessor Prang. Again, that was Jeff Prang, Los Angeles County Assessor. A lot of really important information. As a reminder, we do have a Q&A session at the very end. If you do have a question, please use the Zoom Q&A feature. Submit it into the Q&A. We will answer it at the very end. With that, I would like to move on to talking about the DFPI. So again, my name is Cooley. I'm the Targeted Outreach Director for the California DFPI. Let's talk about the DFPI. Who are we? What do we do? What is our role? The DFPI, our central purpose is to maintain a fair, healthy, and trusted financial marketplace for all Californians. We do this by regulating and enforcing a variety of financial service laws on financial services, products, and professionals. We also provide free presentations, in-person webinars all throughout California to help inform and protect consumers from frauds and scams. We do have a dedicated section on our website with a lot of consumer information and news. It's dfpi.ca.gov/consumers. And with that, I do want to share some of the mortgage relief resources that we've been able to gather together. Individuals who have been affected by the LA wildfires may be eligible for 90-day mortgage payment forbearance periods, also relief from mortgage-related late fees, and protection from new foreclosures or evictions. And there's no negative credit reporting of late payments. This was kind of help put together by the governor's office. And we have a lot of great information on this. We highly encourage you, if you again, were affected by the LA wildfires and you're having issues with repaying your mortgage, please reach out to your lender or mortgage lender, mortgage provider, mortgage servicer, to find out what kind of forbearance and assistance they could help provide you. Reach out to them first. We do have a website with a lot of this information. Also, a one sheet you could download with more information. It's dfpi.ca.gov/LA-fires/relief. It's a list there. You'll find a list of lenders and services who are kind of participating with these mortgage relief resources. So just quickly talking about getting help with car debt and loan servicers. If you have a car loan, and more than likely your car is probably insured, and if your car was damaged, you should definitely contact and go through your insurance provider. Now, if you're having issues with trying to get help with your insurance provider, you can always submit a complaint to the California Department of Insurance. They have a phone number here. It's 1-800-927-4357, or you could visit their website. The link is right there. Again, this is the state department that regulates licensed insurances. And again, if you're having a problem with trying to get help with insurance recovery resources on your car, you can always contact them. The other thing is, if you're having issues with your car loan provider or your servicer, we actually license many of them. We highly encourage you to contact and work with your car loan provider or servicer first, right? Find out what kind of forbearance they may have, or if they have any other programs to help assist you with payments, or defer payment until you get insurance to, of course, cover for the cost. But many car loan providers and services are licensed by the DFPI, and if you do experience any issues, please submit a complaint to us. There's a link to it there, to our website, where you can submit a complaint, and we can help mitigate, also help review, and also try to help come up with a solution. The link is dfpi.ca.gov/submit-a-complaint. Okay. With that, I do want to hand it off to the DFPI student loan ombudsperson, Selena Damian. She's here to talk about student loan, how to get help with your student loans.
Good afternoon, everyone. Thank you, Ku. Thank you, everyone, for being with us today. My name is Selena Damian, and I'm the ombudsperson here in California and at the DFPI. Before I get started on information about student loan forbearances and deferment through this disaster, I want to remind everyone of their rights and protections under the California Student Borrower Bill of Rights. These are in addition to the rights that are outlined in your master promissory note, and the bill applies to borrowers with both federal and private loans. And it applies to student loan servicers. Servicers are going to be your main point of contact. They are the ones that track your loans. They send your bills, process your payments, any changes in repayment plans, deferments, forbearances. This is going to be for federal loans, your MOHELA, Advantage, Ed Financial, and NELNET. Under the Bill of Rights, servicers, it prohibits servicers from engaging in abusive, unfair, or deceptive practices, and it requires that they work in your best financial interest. Student loan servicers must provide accurate information about loan terms, repayment options, and benefits. They must provide information and applications for IDR plans and other forms for federal benefits and protections. They must post and process student loan payments and paperwork in a timely manner and maintain all your records. We understand currently there may be long waiting times with servicers. Borrowers are having trouble receiving consistent information. There is a lot going on with the federal loan student system and the Department of Education. So these protections are very important, especially at this time. If you have any questions about whether or not a servicer is acting lawfully, you can always contact me and I will provide the information in a few slides. Next, please. If you are a borrower with student loans and you have been affected by the wildfires, by this point, you should have automatically have been placed on a disaster forbearance for 90 days. So FEMA, if you're in a FEMA designated area and you're registered, that's the address that's registered with studentaid.gov and your servicer, your loans were placed on this type of forbearance. So for the 90 days, no payments are due. Interest will continue to accrue and time will count towards public service loan forgiveness or IDR forgiveness as long as you can certify the time. This type of forbearance, this automatic forbearance, applies to borrowers that are not in default and that do not have a Perkins loan. So borrowers that are in default or have a Perkins loans will have to contact their student loan servicer to request this forbearance. If you do not live in a FEMA designated area, but you still require assistance, let's say you lost your job, you can request an unemployment deferment. And then you can also apply for a general forbearance for financial hardship. Another thing that's an option is exploring IDR plans. We currently IDR processing switching to other repayment plans is on hold. So I would look more into the deferments and the forbearances. If you are in a FEMA designated area and you think you were placed, I would still call and confirm with your servicer. You want to continue making your payments until you are sure that a forbearance has been placed on your account. You also just want to confirm your status. We do have a lot of borrowers that were previously on the SAVE income-driven repayment plan and were automatically placed on a forbearance. Those borrowers that are on IDR plans have to recertify. For those borrowers that choose to not be on this natural disaster forbearance and you are on a SAVE forbearance, just know that recertifications have been extended through February 2026. So in essence, you may not have to make any type of movement to your loan if you are already on a forbearance. But that's why you want to call your servicer. It may be a bit confusing, but you do want to call and confirm your status. Again, you can always contact me and I can help you determine that. If you are having problems, which we've already encountered some issues, calling and getting on a forbearance, if you're being given incorrect information or you're being denied that forbearance, you can also contact me. Explore IDR plans. We talked about that. If you have a private loan, you can contact your lender and request a forbearance. They will give you your options and then tell you how long, the requirements. If you contact your private lender and they deny your forbearance, again, you can contact me, and then through DFPI, we do have a way for all Californians to file complaints against their servicers, and then sometimes we can also request forbearances through that process, but you shouldn't have any issues getting the initial information. Next, please. Again, as I've mentioned, to protect yourself, you really want to continue monitoring the forbearance status to avoid delinquency or default. So don't just assume that you've been placed on a forbearance. Contact your servicer. If you have to send them through their chat function, make sure you're using that as well. Another thing that I want to suggest to everyone with student loan, any borrowers, to download and save all your current loan documents. So these are all the documents on your student loan servicer portal, on your studentaid.gov portal. This includes any payment records. This includes any PSLF progress tracking records. You can always contact your student loan servicer. Under the law, they have to provide you all your records. So if you are not able to download them through the portals, you can always contact them and request that they provide that information to you. Set up email notifications with both studentaid.gov and your servicer. And then don't change your address if possible, because that's how they're going to verify that you are that you have been affected and within that FEMA designated area. Check your credit report to make sure that there aren't any negative changes to your credit report. After the COVID payment pause, there was a 1-year on-ramp period where student loan servicers were not reporting to credit reporting agencies, and that just ended in October of 2024. So now we're seeing changes to credit reports. They started reporting for borrowers that haven't made a payment prior to COVID, as well as defaulted accounts that are in default. Here is my information. As I mentioned, you can go ahead and submit a complaint against your student loan servicer, federal or private. If you're having issues, you can even file a complaint to obtain records. If you're calling and you're encountering long wait times, I would also encourage to submit complaints to that. We do want to know what's going on, and we want to help borrowers with that. Student loan, we have created a student loan network that helps borrowers, where we can provide one-on-one counseling with general questions or legal questions. So if you're having any issues with the private lender, any type of collection action, legal action, the Student Loan Network can provide assistance for regardless of area, but we do urge you to use that resource. Next, please. I know we've been mentioning scams and frauds, but really important, this has been going on prior to this disaster. You may receive a call, text, or email offering assistance, more specifically offering student loan forgiveness, offering zero payment, offering some sort of relief. I would urge you to verify the information and research the company. You can look up the company, Google their web page. Remember that your student loan servicer and student aid, if you look online, their address, their email website address will end with .org. You will not see, or I'm sorry, .gov. You will not see a .com. You can look at BBB all there if they have any, the Better Business Bureaus, or any complaints that have been submitted to them. Never give out your login information or your passwords. This includes your studentaid.gov ID, your student loan servicer passwords. Do not pay, subscribe to any monthly service, or sign a contract. These forbearances that I mentioned in the previous slides are all free. These should have either been applied automatically, or they should be just putting you in that status. Don't sign a power of attorney with any company. No one can guarantee forgiveness. Many times what they're doing is they're offering a relief of your payment, and all they're doing is putting you on an IDR plan for a $0 payment, and they're still taking your money. It's very hard to get that money back. Just remember, there's nothing that a company can do for you that you can't do on your own for free. There's lots of resources, including myself, the DFPI, the Student Loan Network. So we will be glad to help you, and please file a complaint. And then, just as with, I think, any service, if you're receiving multiple calls a day and they're offering special access guaranteed, or there's a sense of urgency, I would think twice and hang up. That's it for me. Thank you. Cool. I'll hand it over to you.
Okay, thank you so much. That was Selena Damian. She is the DFPI's student loan ombudsperson. She actually helps very many students every day. Feel free to contact her for more information with, if you need to know more about how to get relief with your student loans. With that, we are now at the Q&A section of our webinar. As a reminder, if you do have a question, please submit it into the Zoom's Q&A feature. I will read your question and then throw it out to our guest speakers so they might be able to answer it for it. So first question here we have, it is, are student loans, if forbearance will be like COVID where interest is deferred?
Yeah, I can answer that. If you are placed on the disaster forbearance, interest will not be deferred. You will not have to make a payment. Those months will count towards forgiveness programs, but you will continue accruing interest if you're on that specific type of deferment. So again, I would call and confirm with your servicer, because you may have already been on a different type of forbearance prior, but you can contact me if you have any questions.
Okay, great. Thank you, Selena. Next question, what is the DFPI and what is your phone number? So I'm going to put the phone number into the chat, and hold on real quickly here. Call the DFPI at, there you go. It's a 800 number. It's 866-275-2677, between normal business hours, 8 to 4, I believe. You will reach a live person and they'll talk to you. It is kind of our call center. The DFPI is the state's financial regulator. So we regulate, we enforce many of the financial laws, and we license, regulate, oversee a number of financial institutions, professionals, industries in the state of California. Some examples include state chartered banks and credit unions, mortgage lenders, mortgage providers, mortgage originators, investment dealer brokers. I talked about debt collectors. We license or regulate them. Payday lenders, student loan services, I think I said already, many other financial institutions and professionals. If you do have an issue with any one of those, feel free to call us or go to our website. You can submit a complaint, and again, we will review those complaints. We will help investigate them, and hopefully we can mediate some kind of result that will help you out. So great question. Thank you so much. Open questions now, so please feel free. Here's your opportunity to ask anything from one of our guest speakers. Again, please submit it into the Zoom's Q&A feature. As a reminder, though, as we're waiting for questions to come in, this is only part one of our resources webinar. We have another fantastic webinar that's going to happen Thursday. That's at noon, March 27th. Be sure to register. It's going to be on fraud prevention and local resources, and I'll be there again, and we're gonna have some fantastic information put together for you on how to avoid frauds and what to do if you become a victim of fraud or scam, and then of course other local resources that you could take advantage of. I don't see any other questions coming in. I do want to give another 30 seconds just in case someone's just quickly typing. And I do want to, in the meantime, I want to go ahead and thank many of the great guest speakers we have. Again, first speaking was Elizabeth Gonzalez. She was the senior supervising attorney with Public Counsel. You guys do an amazing job. I'm actually going to tap you for another webinar on debt collections, maybe something 1 hour long. We're going to just dedicate it. I love it. It's a lot of fantastic information. Then we had Jeff Prang. He is the Los Angeles County Assessor. A lot of great information on assessments and getting relief there. And then, of course, I talked about the DFPI, what we do, and then we introduced Selena Damian, who is the student loan ombudsman here at the DFPI, who could help you with your student loans. Well, great. We have another question came in. What kind of notification has been sent to residents about tax breaks? Good question here. I don't know if any guest speakers, feel free to jump in and answer if you have this answer here. I don't know if any specific notifications have been sent out. Oh, it looks like Ian is typing something. So yeah, we'll wait for his answer there. Next question is, how can I protect myself from predatory credit card offerings? Good question. How can you protect yourself? I would say do your research. That is kind of the best thing that you could do. Elizabeth might have a better way to answer this. Please go ahead, Elizabeth.
Yeah, I mean, I would say if you're saying it's a predatory card offer, then you can ignore it, shred it, get rid of it. If what you're trying to figure out is finding a way to borrow money that's not at increased rates, it's really going to depend on your credit. We have some general information about sort of credit reporting, but I mean, I think the thing is, if you have identified it as a predatory loan offering, just say no. There are other organizations, if you need immediate sort of financial assistance, call 211. The Jewish Free Loan Association is a great organization. They offer 0% interest, 0 fee loans, especially to those who have been affected by the fires. They have lowered their credit score requirements and their cosigner requirements. So the Jewish Free Loan Association is probably should be your first call if you're looking for assistance at this point.
Great. Thank you, Elizabeth. Would you mind putting that in the chat so you could share it? That's a great, fantastic resource. And yeah, exactly what Elizabeth's saying. If you've identified as predatory, or maybe you're getting a lot of solicitation mail, right? There is a do not mail registry. I'm sorry, off the top of my head, I don't know, but I'll put it into the follow-up email. And as a reminder, we will be sending a follow-up email to everyone who registered for this webinar. It'll have a link to this recording so you can rewatch it. It'll also have a copy of all of our slides, and I'll go ahead and make sure that I have a link in there for the do not mail registry. If you're getting a lot of solicitations from like credit cards or loans and that kind of thing, just make sure to put your name there. And if they do send you mail, you can always let them know, hey, I'm on this registry. Please make sure you don't mail me anymore. That way you don't get so much junk mail from all those lenders. Okay, so wow, another question coming in here. I have clients in the firestorm area of Altadena. Their houses are still standing but damaged. Do they get notification regarding the property tax adjustments? So maybe Ian might be able to answer this. And he's typing the answer, which is great. I think I'm going to go ahead and answer that question. My team's been doing great. So Jill had asked a question, what kind of notification has been sent to residents about tax breaks? Ian replied, you may be referring to the assessor's homeowners alert service. This does not notify you of tax breaks, but it does send an email notification where a title change or other activity has been recorded on your property. You could sign up at assessor.lacounty.gov/news-information/e-notification. It's a long link. Please check it out in the Zoom Q&A answers. You should be able to see that right there. I highly, highly recommend signing up for your assessor's notification. I live in the Fresno Central Valley area, and we've been hearing a lot of information about title theft. So please take advantage of that if you can. So we are coming up on the hour. I do want to wrap up really quickly. If you do have any last minute questions, please feel free to submit them in. I will answer them. But until then, I'm just going to talk quickly about some last minute reminders. Again, this is only part one of our two-part series. Our next part, which is on Thursday, March 12th at noon, please register for it. There's a link to it right there. Again, we'll be talking about fraud prevention and accessing local resources. With that, I do want to plug our monthly newsletter. It's an email newsletter. You go to dfpi.ca.gov/subscribe. You'll get lots of fantastic information, notifications about webinars just like this and other events that we're doing. We do have a YouTube channel, and that's where we will be publishing this video. So please check out our YouTube channel, subscribe to us if you can. And finally, we do have a lot of other events that are happening across California, in person, virtually. Check out our events at dfpi.ca.gov. Okay, so I don't see any other questions. With that, I do want to say I want to give a big thank you to our guest speakers. They've been amazing. And also want to give a big thank you to all of our attendees. I know it is a beautiful Tuesday afternoon, and you've taken the time to come out and be here. And so I want to say again, a big thank you. Please take care of yourself and each other. Goodbye. Have a great day.